Good morning, and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew. Now, you've probably already been set up for the day's trade if you are tuned into our social media platforms. At 8 o'clock, that's when trade setup happens. But if you haven't, let me take you through a few of the key information points to bear in mind. The first, of course, is the big event that will happen later today, and this is what global markets are focused in on, and that has to do with the outcome of the FOMC meeting. We're widely expecting the Federal Reserve to keep policy rates unchanged. Now, take into account what happened on Monday, because we're trading now after a gap of a day. You saw the Nifty 50 trade in a very, very narrow range of less than 80 points. You saw PSU banks that outperformed in a very big way. The pack as a whole gained close to 5% at one point before cooling off towards the end of the session. And a few of the smaller names were the ones that really saw price action. Something like an Indian overseas bank gained quite substantially. In fact, became the third largest public sector bank by market capitalization, overtaking Punjab National Bank during that session. You also saw auto that was in focus. And incidentally, we'll start this show with a conversation about the auto pack and what to expect going forward. A few of the other stocks were under pressure, though. You had the likes of the metal index, you had realty and media stocks that were under pressure. Now, overnight, you saw, or rather on Tuesday, you saw crude oil prices go further higher. They hit that $95 per barrel mark. Brent crude is what I'm talking about. And they've cooled off from that point to just over $94. That's going to be a key monitorable. And also overnight, you saw the US 10-year bond yield ahead of the FOMC outcome hit a 2007 high. And usually this has a bearing on capital flows globally. So that's another factor to watch. Apart from this, geopolitical tensions are also a talking point at the start of trade today. Canada and India not mincing words with each other over the killing of an individual in that country. That individual, of course, was one of the most wanted terrorists on India's list. And Canada making certain allegations, which India has responded very strongly to. The implications, of course, are that you could have or you could see some bearing on investments by the pension funds. Nothing is clear as of now, and these entities which manage a large amount of assets have not gone on record to say anything. But having said that, some of the numbers that are flashing on your screen, there is significant investment by the Canada Pension Fund. CPPIB has about $21 billion, and the other two have $6 billion and $2.2 billion invested in India as of the last available data. And of course, you're not expecting any of these entities to make very knee-jerk reactions, because these are entities that invest for the very long term. But still, a list of stocks that you should bear in mind, the likes of Kotak Mahindra Bank, Delivery, Indus Towers, and 68 odd other stocks that these investment or pension funds invest in. Now, let's focus in on the other aspects and the cues that you need to bear in mind from an F&O point of view. Agam is joining in to give you some perspective on that. Good morning, Agam. It's an action-packed start to the day, and a lot of factors outside of F&O to focus on. But what are the key triggers that you're looking at?
Right, Alex. So, we went in Monday, it was a truncated week with not too much expectations in terms of, movement in the market. A lot of consolidation expected. But now that we have the Canada issue, and of course, we will also have, an update from the Federal Reserve, which means that we are likely to see further expansion in option premiums. But once again, I start off with what's happened in the futures market. And with respect to the Nifty as well as the Bank Nifty futures, as far as the September monthly futures go, we have seen taking off of positions. We have seen unwinding of positions with a decline of nearly 2% in open interest for the Nifty futures, and the Bank Nifty futures seeing a decline of as much as 8%. Moving on to the Bank Nifty, do remember today is the weekly expiry, the weekly options expiry. So we're watching out for about a 200-point range. But do remember, because of that additional fundamental reason, we could see this range widen further in today's day of trade. For now, we're looking at a 200-point range between 46,200 on the higher end and 46,000 put, which has in fact seen a lot of addition in OI over the past few days on the lower end. Moving on to the Nifty as well, we've seen a lot of traction in and around the 20,100 and the 20,200 mark. A lot of traction with respect to writing around the 20,300 calls as well. So we just may have a little bit of resistance building up as far as the Nifty, of options change is concerned for this particular week. Finally, moving down to stocks, HDFC Bank is the big one. We're going to talk about that in a lot more detail in the show today. But that saw a decline of around 1.8%, and we also saw shorts building in with the 1.2% increase in open interest. So watch out for that. We will talk about that in a lot more detail in just a bit. Infi and BEL are the other ones which are also looking at long unwinding as well as short covering respectively. So we'll be watching out for that.
And thanks so much, Agam. And in fact, important to point out HDFC Bank. I failed to mention that is going to be a focus, and we'll talk about it like you mentioned. Thanks so much, Agam, once again. Before we get into HDFC Bank, and this is, of course, relating to certain conversations that the bank has had with analysts, and we'll come to that in just a bit. I want to focus on the auto pack, because if you look at the price action over the course of Friday and Monday, a few stocks like, for example, Bajaj Auto gaining close to 7% on very high volumes, Mahindra and Mahindra gaining over 5 or close to 5% or thereabouts. Similar moves on TVS as well as Hero MotoCorp, which has gained about 4%. A lot of these stocks suddenly in focus. What are the reasons, and where do we go from here? To talk about this in a little more detail, I've got with me Abhishek Gaoshinde, who's the Deputy VP at Sharekhan by BNP Paribas. Thank you so much, Abhishek, for taking the time. What would you attribute this sudden price action to? Is it the festive season that is in focus?
See, broadly, if you see that this is one of the very good year for an overall automobile sector. If you see that it's an outperformed the overall Nifty in a YTD basis, roughly Nifty index has gone by 30% compared to double-digit growth in the Nifty 50. What are the key critical reason at this point of time is that as we are entering into the festive season, and the kind of retail sales that we have seen during the Onam, and the expectation is for this Ganesh festival, what we are expecting that we will see a strong rebound in the overall retail sales in passenger car as well as in the two-wheeler segment also during the 42-day festive period started from the Navratri in the quarter 3 FY24. And the second point is that with the volume, now what is happening that the margin is also expanding. Given that the high base effect of the last year, the street is not expecting a humongous growth in the volume, but because of the OEMs focus on the premiumization, continuous price hike, and the raw material tailwind, the EBITDA margin expansion is expected to be better than that of the previous 3-4 years, and the earning upgradation or the earning growth would be largely derived from the expansion and the EBITDA margin compared to the volume growth. So this trend is fueling a kind of a re-rating in the overall auto stock, and as the gradually street has been expecting this more, the reflection has been visible in the automobile stocks.
Now, one of the headlines that we're taking this morning, of course, is Tata Motors, which has announced a 3% price increase in its CV range of vehicles. But are all automotive companies across the board able to have those price increases, and the EBITDA margin expansion, is that playing out across the board, or is it in certain categories that you're seeing this happen?
Across the players, OEMs are increasing prices, and this is a peculiar trend that we are seeing, because what is happening that the entry level demand is weak. Whatever the demand is coming out from, it's coming from the premium segment. As you talked about the Tata Motors, this is one of the important thing that the investors have to keep in mind at this point of time, is that Tata Motors changed its strategy in the CV segment. Earlier, it was focusing on the market share, and for that, it was giving heavy discounts. Now, it has cut down that strategy. It is not going for a heavy discount and chasing the market share, but focusing on the EBITDA margin. If you see the last 2-3 quarters performance of the Tata Motors, especially in the CV segment, irrespective of the volume growth, the margin expansion trend has been there, and the company has been focusing EBITDA margin. This trend would be more visible as we go ahead in the year, as when the volumes would also pick up, and side by side the premiumization or the increase in the volume of the high price products along with this price hike, we will see better operating profitability in the CV space, along with the Tata Motors and this Ashok Leyland also, which has also been delivering double-digit margins. So this trend would we will see across the segments, and that would continue as we are expecting that.
Now, finally, I was also looking at the consensus analyst recommendations, and there are quite a few buys in the system. In fact, more buys than anything else. And the return potential for something like a Tata Motors based on that consensus price target is still 10% from this point. So there is a considerable upside. What are your picks in the space? And would you also be able to include the wider auto ancillary space? Because I think a lot of attention has to go there as well.
As you talked about the Tata Motors, so it has been our topic, and we have been consistently recommending it to our investor. The basic thing in Tata Motors that has been changed now is that earlier what was happening, that one of its segment has been doing well and others are dragging. But now all of its three segments, that is JLR, that is CV, and this PV segment, all three segments are doing well. Along with that, its net automotive debt is coming down. So we are considering Tata Motors as a sweet spot. And as the margin improvement theory is going on, theme is going on in the Tata Motors, we will see further upside from the current levels also. Along with that, we are also liking Hero MotoCorp because of its product launch strategy, and it has also gained market EBITDA margin in last quarter. Its IC portfolio has delivered an EBITDA margin of 14%. Companies are targeting EBITDA margin in the range of 14% to 16%. And with this new product launches, it has been expecting one of the good festive season in this year. The introduction of this Harley Davidson X440 has completely changed the the face of the Hero MotoCorp. Earlier, what we are seeing, that they, being a mass market player, it has been building up inventory and then stimulating the demand. But what is happening now? It has in Harley Davidson, it has received an advance booking of roughly 25,000 units, and now the people are waiting for a supply. So this kind of a change would obviously reflect in the this valuations, and that has been happening. Secondly, you talk about the auto ancillary segment. So in auto ancillary space, we are liking Bharat Forge, Mahindra CIE, Schaeffler India, and in the small cap space, we are liking Sterling Tools and Lumex Auto Technologies. So what is happening in the Bharat Forge, that it is also getting the benefit of this defense system along with its traditional market. Now it is focusing on these two segments: is defense and second the EV. In defense, what is happening, that it is still waiting for an order inflow from the domestic market, but has already booked up an order book of roughly 3,000 crore, and larger part of this order book has been coming from the export market. So when you are selling products in the export market, it justifies the quality of your product. And along with that, it has also built up a capacity in the casting space. So whatever we have seen in the forging space in last 10 till 12 years, that may repeat in the casting space also. In case of Mahindra CI.
Sorry, I'm going to have to. We're running out of time on this conversation, but I think you've summed it up quite well, Abhishek. Thank you so much for joining in and giving us that perspective on the stocks to watch out for in both the auto as well as the auto ang space. And pleasure speaking with you.
Thank you. Thank you.
All right. So there you have it. A few stocks to watch. And in fact, we'll bring you more details over the course of the day and see how the auto pack reacts. But speaking of stocks reacting, HDFC Bank could have quite a bumpy ride in trade if we're reading the signs right. And in fact, let's bring Pragati in to give you some perspective on what the latest here is. Of course, the bank and its management met with analysts a short while back and spoke about certain triggers that are coming into play with the merger with HDFC. And one of those triggers, of course, is asset quality. The other is the compression in net interest margins. What can you tell us as the top headline from this analyst meet?
Thanks, Alex, for that. So HDFC Bank held the sell-side analyst meeting on Monday, and they pointed out various points, like, the asset quality might take in, like you just pointed out. But one of the key aspects that stood out for me when I read and went through the whole thing, that the bank will see some moderation in its net worth going forward, primarily because there have been changes in the accounting standard and there has been a credit policy harmonization as well. But now, if you look at it, another point that stands out and everyone has been talking about is that the bank will see some asset quality worsening over the period of time. And if you look at the numbers at this point as well, the gross NPAs are expected to increase to 1.4% as of 1st July, compared with 1.2% as of 30th June. And even if you look at the net NPA ratio at this point, they will rise to 0.4% compared with 0.3% as of 30th June. But while talking to the analysts, the bank has made it very clear that the rise in bad loans is mainly due to the HDFC's non-retail housing loan portfolio. Because here, your gross bad loans stood at 6.7% as of 1st July. Now, while talking to the analysts, the bank's CFO, Mr. Vaidyanathan, also said that the bank has enough provisions against such loans, because even if you look at the numbers, as of 1st July, the provision coverage ratio of the bank for the combined entity, if you look at, stood at 74% versus the 75% on 30th June. Now, another point that came in, and everyone has been talking about, that there's a lot of surplus liquidity in place, which is expected to have a hit on the margins. So if we look at it, as of 30th June, the bank's NIM, which stood at 4.3%, it is expected to fall to 3.9 to 4% post the merger now. Now, as a side note, if I point out, in the HDFC Bank AGM that was held in August, the CEO, Mr. Jagdishan, also said that the bank expects the NIMs to drop in the second quarter, but we will obviously wait for the numbers to look at it. Another point on the excess liquidity front that the bank has guided towards is that it expects to use it up in the next 3 to 4 quarters. As a side note, an additional point, recently, in fact, yesterday's announcement only, RBI has allowed Mr. Shashidharan to be reappointed as the MD and CEO of HDFC Bank. So now his tenure has also been extended till October 2026. So a lot of factors at play. We'll wait and see how the numbers play out, and let's see what is in store for HDFC Bank going ahead.
All right. Thanks so much, Pragati. And by the way, HDFC Bank, one of the key monitorable stocks on Monday as well, it lost ground. It was one of the worst performers on the benchmark index, and in fact, quite a contributor to the close lure for the Nifty 50. Let's focus in on the other stocks in the news. We've got Varsha joining in to talk about the stocks on her list. There's an update on Jio with regard to certain products that they're launching. We'll start with that and move to the other stocks on your list.
Yeah, so as you rightly said, so now Reliance Jio has announced the launch of Jio Air Fiber services in 8 metro cities across the country. Now, for those unaware, Jio Air Fiber is the company's fixed wireless access solution powered by company's true 5G service. Now, cities where Air Fiber has launched are Ahmedabad, Bangalore, Chennai, Delhi, Hyderabad, Kolkata, Mumbai, and Pune. Then if you see the prices and the speed that company is offering, so Jio Air Fiber plans start at rupees 599 and the company is offering speeds up to 1 Gbps. Existing Jio Fiber tariff plans continue as is, and there is no change in existing user tariff. Now, Jio Fiber already serves over 10 million customers. With Jio Air Fiber, companies expanding addressable market to rapidly cover every home in country with similar quality of service. Now, offer that Jio Air Fiber has come out with includes digital entertainment, wherein 550 plus digital TV channels are included. Catch-up TV that will allow users to go back as long as they want and pull out their favorite shows, and 16 plus OTT apps that you've got. So all these are the offerings that Jio Fiber has got.
All right. Now, what are the other stocks you've got for us, Varsha?
Yeah, so the first one is NBCC, where the company has won 150 crore order from Khadi and Village Industries. Now, the contract is to construct office buildings, residential campus, redevelopment, repair and renovation. Now, the time period which the order is to be executed is yet to be decided. But if you see the consolidated order book of NBCC as on June 23, that stands out rupees 55,000 crore. Then the leading cooling products maker Blue Star on Monday launched its QIP with a floor price of 784 per equity share to raise 1,000 crores to support its growth plan. Now, the company may, at its discretion, offer discount of not more than 5% on the floor price, so calculated for the issue. Also, the proceeds will be used for the funding growth plans. Then you've got general corporate purpose and also to retire some debt. Then lastly, we have Amber Enterprises, the company's unit Ilgene Electronics India entered into joint venture with Next Base Marketing, which is owner of Noise brand. Now, this is to design, manufacture, and sell electronic wearable, including smartphones and earphones. Now, Noise claims to be manufactured over 95% of wearables and smartphone accessories in India. Now, the proposed JV company will be 50% owned by LG and 50% by Nextbase.
Interesting updates there. Thanks so much, Varsha, for getting us those updates. Incidentally, just not too long back, in fact, just a minute back, we've got an update from Bharat Dynamics, which has signed a contract with the IAF for supply of surface-to-air missiles. And this is an order worth 290.9 crore rupees. There are a lot more notifications to pay attention to, and in fact, updates from companies. And we've got Rishi joining in with his list of stocks. Morning, Rishi. What do you have for us?
So firstly, there's Zydus Life Sciences, which received a EIR, which is the Establishment Investigation Report from the US FDA. And the inspection was conducted at its formulation manufacturing facility in Ahmedabad. But it was a pre-approval inspection and it concluded with nil observations, so nothing to worry there. Then there's Thyrocare Technologies, which entered into a subscription agreement at Tanzania with Casti Farm Limited. Now it is setting up a JV to provide diagnostic as well as healthcare services to customers directly through laboratories that are either owned by the JV or through third parties in Tanzania. Now, this would involve an infusion of investment of up to $500,000, as well as an indicative period for the infusion would be around 240 days since September 19th. Then there's GMR Airports, which came out with its August update. The passenger traffic was up by 27% and it stood at 9.79 million, and the air traffic movement was also up by about 16% year on year at 64,000 approximately. This would have been probably because of the heightened activity during the G20, because GMR also has an airport in Delhi. Apart from that, it includes airports in Hyderabad, Mopa, as well as an airport in Indonesia, as well as Philippines. Then there's Ashoka Buildcon, which received an order worth 645 crores from Maharashtra's State Electricity Board. Now, this order is for the revamped distribution sector scheme for loss reduction works at 4 circles in Maharashtra. So the RDSS scheme is a scheme that is launched by the government with an investment of over 3 lakh crores over a 5-year period to improve affordability and of power supply to consumers. Then this Kajaria Ceramics, whose UAE arm, signed a 50-50 JV with United Kingdom Parts. Now, this JV is formed for the trade and distribution of tiles and allied products, which includes glazed tiles, polished tiles, and other products in the UK. And it has a capital infusion of about £150,000. Then there's JSPL, finally, whose chairman, Naveen Jindal, will retire as an executive director, but he'll continue to operate as a non-executive editor going forward.
Director.
Yeah, non-executive director. Yeah.
In the newsroom, we're used to saying editor. But thank you so much for giving us those updates, Rishi. And finally, let's focus on the primary markets, because there's quite a lot of action there. We've been covering a lot of these companies, and you'll find a lot of these conversations on IPO Adda on any one of our social media platforms. But let's get the latest. And one, of course, is that RR Kabel is going to be listing today. Himanshu is giving us the latest here. Apart from that, so you've got RR Kabel at the start, and there are a couple of more updates as well.
Right. So Wednesday is especially critical this week, because you have RR Kabel listing today, and then you have 2 offers that are set to open today, one being Signature Global and the other being Sai Silks. But I'll start with RR Cable, where the company had raised a total of 1,964 crores, of which only 180 crores were a fresh issue. It was mainly for the TPG it was mainly an exit for TPG investments, who were amongst the main selling shareholders, but they still retain some stake in the company. Now, talking about the 2 offers that are opening today, we have Signature Global, where the offer opens and closes on Friday. The price band is set at 366 to 385, and the company plans to raise over 730 crores. So this company is involved in real estate development in the affordable and lower mid-segment housing, and it plans to use the capital towards expansion plans and prepayment of loans, as well as infusing some capital in subsidiaries, which will help in its organic and inorganic growth efforts also going forward. The company is also, Nomura is also picking up a substantial stake. I'm talking about the anchor investors here, who have raised almost 730 crores. Overall, 19 anchor investors comprising of 3 domestic mutual funds, comprising of ICICI, Bandhan and Quant Mutual Fund, have helped raise almost about 30% of the allocation of the total overall investor allocation. And then coming on to Sai Silks, the offer opens today again and closes on Friday. The price band is set between 210 and 222. The company plans to raise almost 1,200 crores, and the company is a retailer in ethnic apparel, mainly saris, and it has a well-established presence in the southern region of the country. The company plans to utilize 150 crores of proceeds for capital expenditure. Working capital has around 300 crores allocated towards it, and 50 crores towards prepayment of borrowings. The company also raised about 360 crores ahead of its IPO. And what's interesting to note is that 72% of the amount that is raised is contributed by domestic mutual funds, which is a stark contrast to the Signature Global that had 30% allocation from domestic mutual funds. And now coming on to 2 IPOs that have concluded, when we have Sami Hotels, the overall subscription stood at 5.33 times, and then Zaggle Prepaid, the fintech player, had an especially keen interest from retail investors, where the overall subscription stood at over 12 times and retail portion was subscribed by almost 6 times.
And you have Yatra closing today as
Correct.
well. All right. So thanks so much, Himansh, for bringing us those updates. We'll bring you more over the course of the day. But like I said at the start, the Canada issue is something that we will discuss again, and with a lot more experts. We'll have to see how these developments have an impact on the stocks. And besides that, we're talking about HDFC Bank as well. Do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.